most pursued high risk was of course the payments receivable risk, and the second risk was of course the cyber fraud risk. So these are the two very important aspects. The other traditional policies are also available, as you know, factory related policies and employee health, but these were the two very recently highlighted which have got a lot of tractions from the business owners survey. One, as I told you, one was the cyber fraud risk and the other is related to payments receivable. Right, thank you. Next slide. So, right, so here we are here to tell you as to, so normally when business owners take decisions on risk, so which is also called as risk management, they decide what risk needs to be retained by kaun sa risk hai jo aap, you can do away without transfer. Some risk they identify which can hit the balance sheet. So they normally try to pass it on to insurance companies in the form of insurance, which is basically when you transfer the risk, आप अपने balance sheet से वो risk किसी और को एक premium pay करके transfer कर देते हैं, तो उसी को इंश्योरेंस कहा जाता है. एंड ऑफ कोर्स एज यू अंडरस्टैंड द एंटायर कॉन्सेप्ट ऑफ इंश्योरेंस वर्क्स ऑन कि आप 100 लोगों से एक प्रीमियम कलेक्ट करते हैं विच मे बी गुड इनफ टू पे ऑफ क्लेम फॉर one or two people who may claim during the year. This is how the concept of insurance works. Why I kept this slide is because the idea is that mostly when you take risk related decisions, you bucket the risk, whether you want to transfer the risk, whether you wish to retain the risk because you see that there is no pursued element of risk is not financially, uska impact bahut zyada nahi aayega, to ho sakta hai aap usko retain karte hain. But as you feel that the risk ka magnitude बढ़ सकता है, you may always try to review it and transfer it out to an insurance company in the form of insurance contract. Thank you. Next slide. Right. So here, as I told you, what are the risks which are exposed to? Of course, the building, plant and machinery, the office assets and stocks, because these are high value items which are running round the clock, and especially in plastic related industries where there is hazard because it's a petrochemical with product with high BTU, which is British Thermal Unit, which we call as to identify what is the probability of fire or other related losses. So what is the so next point. So what is the risk that is exposed to these buildings, plant and machineries and stocks? There is risk of fire, flood, earthquake. As you all know, that these are act of God perils. Similarly, there is a breakdown of machines risk, especially to the extrusion process machineries, including to the blow molding process or injection molding process. So इसका solutions क्या available है market में? इसके solutions available है. आप एक simple fire policy ले सकते हैं. अभी the regulator, the IIDA, has broken down the fire policy into Bharat Sukshma Udyam, Bharat Laghu Udyam, and Standard Fire and Special Perils policy. Companies who wish to have higher coverages can also go for industrial all risk policy. Similarly, industrial all risk also has provisions to cover loss of profit insurance, which I told you is very critical and important, क्योंकि मैंने आपको बताया कि mostly plastic manufacturing में जितना हमने अपने experience में देखा, हमने कम से कम 200 से ज़्यादा units insure किए हैं, और मोस्टली ये सिंगल ब्लॉक यूनिट्स होते हैं, मल्टी ब्लॉक यूनिट्स नहीं होते. एक ही ब्लॉक में ही raw material, finished goods or dispatches, processing, everything is in one single block. And plastic के hazard के वजह से भी ये important हो जाता है that you always have a loss of profit insurance, because this policy is now available as an independent cover also in the Indian market. Then the other aspect, of course, is the machinery breakdown policy and also burglary and theft policy. So I'll also highlight, because here there's a development in the industry effective 1st April 2024. The regulator, which is IIDA, has scrapped the minimum pricing of IIB. So it's a very welcome move for the industry. There is no regulated pricing for fire insurance. Discounts are available, applicable on your fire flexa rates is what we call as, and it can go up to any percentage of discount, but it all depends upon what kind of risk management practices, what kind of housekeeping facilities, what kind of firefighting facilities, installations you have. The more the risk, better the risk management, of course, you will be allowed or entitled for maximum discount. So here I'll tell you why, as I company also, we tried and focus only on doing plastic insurance business, because we realized over a period of time there were 4 or 5 challenges in the industry. Of course, first was a lot of these plastic companies being MSME units, the fire fighting and other risk management practices are normally not up to the mark as per the as the insurance company's expectation is. So here we have seen a lot of distress settlements of claims also, wherein once there is a loss, the insurance companies and surveyors normally tend to try to cut corners, citing either some flaws in documentation, or अभी क्या होता है MSME में, mostly MSMEs do business to make profits and run their businesses and expand their businesses. Sometimes all your books and accounting practices may not be in compliances कि सर्वेयर जो आपसे मांगे वो आपके पास नहीं होगा. हमने बहुत बार ये भी देखा है, बहुत सारे जो पुराने यूनिट्स में फायर एनओसी नहीं होती है फॉर एग्जांपल, और इंश्योरेंस कंपनीज ट्राई टू non standardize that claim and at times reject the claim. So that's why addressing these challenges, we have tied up with the insurance companies with SLAs on these challenges, which are waiver, which means insurance companies will not ask for those documents, because क्या होता है, कोई भी एक कॉन्ट्रैक्ट होता है उसमें एक एक्सप्रेस वारंटी होती है कि पॉलिसी में लिख के आया, और कुछ होता है इम्प्लाइड कि भाई आपको रूल ऑफ द लैंड फॉलो करना पड़ेगा. तो इन सब रीजंस के वजह से, लाइक फायर एनओसी मैंने बोला, या अकाउंटिंग प्रैक्टिसेस में कभी कभी सेकेंड हैंड मशीनरी बाय होती है, अंडर इनवॉइसिंग भी हमने देखी है, या फिर अगर कोई एसेट्स आर नॉट फुल्ली कैपिटलाइज, तो वी हैव got relevant drafting which we can help you to ensure that your claims are maximized and settled in order. This is the first. The second slide, please. Of course, the second slide is about goods in transit. Of course, a lot of movement of goods happen either in form of purchases locally or import of goods. I mean, now though there's a lot of, again, supply chain disruptions which we are seeing in our clients, and our lot of our clients, especially in petrochemical products, are resorting to bulk cargo imports. Of course, bulk cargo imports come with their own challenges related to losses, because वहाँ पे stowages और handling losses काफी आते हैं. But especially if I talk about containerized cargo, so the exposure, of course, is plastic related commodities. It is all your raw materials. It can also be your capital goods which you import. And what is the risk? So we all understand there's a goods in transit risk. It is susceptible. उसको आग लग सकती है, चोरी हो सकता है, गाड़ी पलटी हो सकती है, और उससे बड़े रिस्क भी हमने देखे हैं. जैसे अभी recently for a pen and stationery client, we settled a claim for 3.34 crores, which was a general average claim. Normally plastics में बहुत बार clients domestic policy लेते नहीं है, citing कि अरे क्या होगा करके. But हमने अभी एक recently claim settle किया है which was related to imports of cargo, wherein there was a general average claim. उसका मतलब कि कंटेनर में ही शिप में आग लग गई, जिसकी वजह से कंटेनर्स को पानी में उतार देना पड़ा था, और उसके वजह से there was claim on the entire vessel. So that is called as a general average. Apart from that, to tell you, very frequently we have seen claims of theft. In fact, we have got another claim of there was a fire in the transporter go down, because on the movement के अलावा there are a lot of various transshipments which happen जिसका कोई control आपके पास नहीं होता है, and it is up to your transporter for those movement of goods. So these are susceptible to risk. तो इसके solutions क्या available है अभी Indian market में? Of course, marine cargo insurance, either you can break it down, you can take separate policies for export, import, domestic sales, yeah, domestic purchase, or else you can also buy an advanced version of policy which is available now in the Indian market, which is called as the marine sales turnover policy, which is a single policy for all your supply chain risk issues. It's a 360-degree cover for, as I told you, for your purchase, imports, container movements, inter-depot movements, yeah, inter-factory movements, job works, capital goods, all can be combined under one single policy. And most importantly, we are in this section, we have got some filed add-on covers, which cover over and above the base policy. Like we have seen शॉर्टेज फ्रॉम सील इंटैक्ट कंटेनर्स, स्पेशली जो चाइना से कंटेनर्स आते हैं, उसमें कंटेनर्स पे तो लॉक लगे हुए हैं, बट सामने से साइड से हिंजेस खोल दिए जाते हैं, थोड़ा माल निकाल लिया जाता है, और फिर जब यहाँ पे कंटेनर खुलती है फैक्ट्री में, तब रियलाइज होता है कि माल तो 20% शॉर्टेज है. सो ऐसे शॉर्टेज फ्रॉम सीलिंग टैग कंटेनर्स आर ऑल्सो कवर्ड. सो what we have done with our more than 18 years of experience in the industry, we have devised add-on covers जिसके वजह से claims can be either rejected or become non-payable. And we have asked insurer to cover them in the form of add-on covers. Similarly, there are covers like seller's contingency cover, which is available, or a concealed damage clause, which can be taken to ensure that your marine sales turnover policy ka coverage is comprehensively designed. Yes, next slide, please. Thanks. The third aspect is, of course, the employee health and safety, very important. Employees, even so in manufacturing industry, especially in the last 3-4 years, we have seen a lot of realization on the kind of benefits what should be offered. We have been asked to benchmark the policies vis-a-vis the competition and the industry. So, of course, the exposed are the payroll employees and also the contractual employees. They are, of course, exposed to any disease or any injury, especially the senior managers, the administrative staff to there are lifestyle diseases these days. The people on the shop floor are exposed to, because they are machinist laborers, and they are exposed to handling hazards also. And the solutions which are available in the industry now is the health insurance policy, the accident insurance, and workmen. So after the COVID, the Ministry of Home Affairs had issued a circular for workers to come back कि अगर तो उनके लिए आप unnamed policy भी आप ले सकते हैं, contractual workers के लिए health insurance. So those kind of, and this can be customized to any extent, what kind of sum insured, what kind of family benefits you wish to have. So again, very important aspect when you do the risk management, because it is the plant and the people who will take you to the next level is what I feel. And of course, people are very relevant in this process. So employee benefits insurance will help you here. Right, thank you. Next slide. Right. So this is again a very important product, especially in the export market. So if you see, if you have got contracts from outside India, especially the American and the Europe market, they will always ask you to supply a product liability or a comprehensive general liability insurance to be in place. Because what happens is, as a manufacturer of the product, ultimately, if there is any bodily injury or property damage, वो product के use की वजह से, final use की वजह से, once it goes out in the market, the liability is always on the manufacturer. It can come back to you with the forward chain. भले आपने अपने forward super stockist distributor को बेचा होगा, but what happens, it can always come back to the original manufacturer. Especially in flexible packaging FIBC, we have seen a lot of notifications related to claims coming in this segment. And of course, the solutions which are available is the product liability, which covers you for bodily injury and property damage. But we have also taken it to the next level and given covers like product recall. Sometimes it may so happen that if a particular defect है कोई batch में या product में, the entire lot can be rejected. Your future lots can be rejected. So recall works in this case if your primary cover is available. मतलब primary cover आपका trigger हो गया है, आपकी policy claim pay कर रही है, तो recall cover is also covered. In fact, product guarantee is also covered. Product guarantee is nothing but product efficacy. कि अगर आपने कुछ प्रॉमिस किया है कि ये प्रोडक्ट ऐसा कुछ डिलीवरी देगा या ऐसा परफॉर्मेंस देगा, और कल को वो नहीं होता है और उसके वजह से भी अगर आपके ऊपर क्लेम आती है, तो भी ये पॉलिसी कवर करेगी. The answer, of course, is comprehensive general liability, which again is applicable for such defective products and product failures. Thank you. Next slide. Cyber, I told you, so as we talk about machine learning, artificial intelligence, so deployments of a lot of these computer and IT assets. So once we do all these system integrations to ensure that we get the right amount of and correct amount of data so that decision making can possible. But here somewhere we are also making us vulnerable to risk related to hacking, ransomware, business interruptions. So very recently there was a manufacturing company which was a fully automated plant which was controlled only by 6 people, and their main SOC was in Italy. The hackers got control of the entire system. Their systems were hacked and there was denial of access. मतलब उन्होंने पूरा production बंद कर दिया, and they had put some request of ransom, and which was subsequently uh, handled and addressed through insurance company. Because a lot of times kya hota hai, sir, it is not only about insurance, is not about only paying claims. Insurance companies help you get right people at the back end who are specialists in the subject, who can negotiate on your behalf, who can ensure that your claims are not getting beyond hands, and they ensure that the claims management is there, and also they help you in the reimbursement or financial settlement of the loss which you incur because of these risks. And of course, the solutions which are available is cyber liability. One aspect which I have not covered here is also very important, but not available nowadays very easily in Indian market, is the crime insurance. बहुत बार क्या होता है, मैन्युफैक्चरिंग कंपनीज होती है दमन सिलवासा या कोई और अलग लोकेशंस में, और फैक्ट्रीज होती है एचओ में, where the business owners are sitting. So sometimes we have seen some kind of वहाँ पे अगर if there's any fraud or anything which is not happening as per the normal. So such kind of crime related financial loss is also covered under the cyber and crime insurance cover. Right. Thank you. Right. This is the crime insurance cover which I was talking about. Of course, I've covered this. So we will skip this. Thank you. Next slide. Right. So what we bring to the table before I give you to Sachin. One of the USPs what we do is we help you in gap analysis, audit of your existing insurance policies to identify if there is any flaw in the policy, if there is any error, omission of clauses. Like very frequently we have seen reinstatement value clause missing in the policies, or maybe we also help you present what kind of forward or upgraded versions available for those your products. Second, we have got some very specific industry relevant add-on covers like spontaneous combustion, static charge, miscellaneous assets which are not capitalized, again can be covered under our policies. We help you in reinstatement valuation, which is nothing but ensuring that your assets are insured for reinstatement value, which is again one of the USPs of fire policies available in India. But to ensure the gross block values or WDV, of course, will not help you. You have to get the right valuation done. So we have in-house valuers which will help you to get you the right valuations. Apart from that, because as I told you, all these discounting and pricing will all depend upon how well you manage your risk. So we also do fire safety audits and thermography, including energy efficiency audit, which will help you to. So once the implementation is done, it will help you to get better discounting and pricing. One aspect, but the other aspect is, see, no one wants claim. So if you want to ensure that the best of the risk management is in place, such activities will ensure your electrical, your maintenance team will work on those audit reports. जो findings आई है, thermography क्या होता है कि एक infrared camera से hotspot areas identify होते हैं. So your electrical maintenance team can work on those audit reports and correct and rectify. इसके अलावा वी ऑल्सो डू मॉक कॉल टू इंश्योर कि आपको क्लेम्स के पहले ही मालूम पड़ जाए कि इंश्योरेंस कंपनी क्या क्या डॉक्यूमेंट्स मांगने वाली है, और वेदर यू एज अ कंपनी इज रेडी फॉर दोज काइंड ऑफ डॉक्यूमेंट्स. थैंक्स. नेक्स्ट स्लाइड. So this is the last slide. The claims which we believe is the moment of truth, and efficient claims management is our USP. And we are based out of Mumbai, as I told you, with a team. We have dedicated teams in-house for underwriting, claims, policy operations. We specialize in plastic processing industries, including master batches, additives, pipes, and writing stationaries. And so we will be involved right from documentation, drafting, settlement with insurance companies, and negotiation with surveyors. So this is what we do. We have settled close to 10,000 claims. Of course, majorly being employee benefits, but property claims are also around 22 crores, 22%. Till date, the biggest claim which we have settled is to the tune of 55 crores for a plastic manufacturing company. And we'll be happy to share more details if someone wishes to during the presentation. If there are any questions, please pop up. With this, I think I will rest my presentation and hand over the baton to Mr. Sachin to take it forward for us.
Thanks, Pramod ji, for giving me this opportunity. Thanks, Plex committee also for setting up this program, and a warm good evening to all the attendees. So you just can move on to the next slide. Yes. So basically, credit insurance, while most of the or few of the attendees might be aware of what it is, but for a larger audience, we are basically here talking about covering your unsecured accounts receivables, especially when it comes to exports. You may or may not know the party to whom you are exporting, and giving a credit to them will lead to a risk of a commercial default, or because of political event, a default or delay in payment. And that is where the credit insurance comes in picture. It not only covers insolvency of the buyer, so you have an exposure on a buyer and the buyer has got insolvent, that event is also covered, as well as if there is a delay in payment. When we say delay in payment, we are talking about a timeline specified in the insurance policy, that within this much time, if you have not received the payment, then it is eligible for a claim, irrespective of whether the buyer is insolvent or not. And once you file a claim, then from there, initially insurance company will take an effort to recover the money, and there also we will have a defined timeline which is defined in the policy. And subsequently, if recovery has happened, that would reduce your debt. If recovery has not happened or partial recovery has happened, then insurance company will pay out a claim from their own pockets. And next risk which we are talking about is political risk, where because of certain political conditions in the home country of the buyer, like export restriction or war or embargo, then in that case, the political risk will come in picture. Yes, Harshit, it is somewhat similar to ECGC, but certain minor differences I will bring it to notice in during the tenure of this during the tenure of this presentation. You can move on to the next slide. Yes. So let's understand what are the benefits of insurance policy. First of all, it takes care of your bad debts. It acts as a protection of the bad debts which you will incur during the program on. Secondly, it helps you to increase your top line by exploring new markets. See, a good strategy to go in new markets is to give credit to the new buyers which you identified in these markets. And before giving a credit, you may not know who are those, and that is where you can keep a reliance on this trade credit insurance policy, because with having this program, you can share the basic details of the buyers with the insurance company. Insurance company will underwrite those and get back to you on what best exposures you can take on these set of buyers. And once you proceed based on the recommendation of the insurance company, if there are any delinquencies, if there are any bad debts, if there is an event of insolvency, the insurance company will make good these losses up to the certain indemnity level based on program to programs. The next aspect which it benefits is borrowing limits or access to better borrowing in the markets. While it is developed in international markets, credit insurance is an important tool. It acts as a collateral while taking working capital facilities or trade finance lines, and slowly and steadily it is picking up in Indian markets also. In short, to tell that if you are availing factoring programs, invoice discounting programs, or any other similar trade finance related program, then you can use this trade credit insurance program as a suitable collateral while negotiating with bank. And you may at times get a facility without giving any additional collateral also. How that would work is, under this program, we would add the respective bank as a beneficiary of the program, beneficiary of the policy, which means in case of a claim scenario and the bank has already financed against those receivables, then the claim can be directly paid to bank with the consent of the insured. So that way it can help you for better borrowing. The next is credit information resource. So we are having a database of more than 13,000 buyers across the world, and that resource would be available. When we say available, based on your request, we will share the information. That access is not for the entire buyers, but with whom you're going to deal, with respect to those buyers, information will be shared with you on what is their credit quality and how much exposure you can take. An add-on with this product is a collection services. So we, once you have this program in place, once you have this policy in place, we also provide you collection services. If there is any delay in payment, then we have our in-house debt recovery team which would work closely with you in recovering that amount, and and that also will have a defined timeline. Within that timeline, whatever is recovered, that will reduce the debt, and subsequently, if entire recovery is not happened, then the insurance company will pay it in the form of a claim. There are certain rules attached to this credit insurance programs. One is you are only covering the unsecured receivable. So you might be doing business on, say, advance or LC, letter of credit, but however, only those which are having open exposure where you don't have any sort of collaterals, such type of receivables are covered. The next is we are covering basically two risks. One is credit risk. Credit risk involves insolvency and protracted default, that is delay in payment beyond acceptable time limit. And third is political risk, that is because of any adverse political events resulting into delay in payment, that can be covered under the program. The third important aspect to understand, where it differentiates with ECGC, is we are here offering a whole turnover policy. There is an entire receivable of wherever there is a credit offered, that is covered under one program. Just to add, that domestic and export, domestic sales as well as export sales can also be covered under one program. On a standalone basis, you can take only exports. On a standalone basis, if you require, you can only take domestic also. So three combination is possible: domestic, export, and a collectively domestic export together in one policy. But once you say that I want to cover this particular product, then all the receivables in relation to that particular product needs to be covered under the program. The your existing list of buyers will be covered from the date of inception, and you can keep on adding new buyers in the program during the tenure of the policy just by giving their basic details like name, address, your payment terms, your estimated exposure which you want to take, and your total turnover with that particular buyer for the given period of the policy. Based on that, you can keep on adding the buyer in the program, and once it is approved, you can start supplying goods to them. Premium is charged on the turnover basis. So you have to estimate, it's an annual program, you have to estimate your turnover for the next 1 year, and based on that, you can pay the premium. The last important rule here is you have to get credit limits on all the buyers. So the buyers which are covered under the program, you need to share those basic details with them and get your exposures covered with insurance company. You can once you start the program, all your buyers, existing buyers, will be covered, and as and when you add new buyers, they will get added to the program. Next slide, please. Certain features to understand here. So indemnity here is 90%. When we say indemnity, we are talking about, say, if your invoice value is, say, 100 rupees, up to 90 rupees will be made good by the insurance company, and that will be defined before the inception of the program, that what are the indemnity levels insurance company is providing. Then we have a concept of minimum premium. Because this is an estimated turnover, you may or may not achieve that turnover. That is why we keep a minimum premium concept. Say, for example, you wanted to take a program for 100 crores, and we say that, okay, we would collect, or we would incept the program by only collecting 80% of the premium. So you'll be technically covering 80 crores as a turnover, but we will take periodic declarations from you quarterly, say, and say at the end of 2 quarters, 3 quarters, if you're close to 80 crores, then we will come back and request you to estimate the turnover for the balance period of the policy. You can pay that premium and cover your future shipments. Here, estimated turnover refers only to your credit sales of the company. So you need to make sure that when you're giving any declaration of your turnover, you need not include the turnover of the company. You need to specifically give turnover only of the credit sales which you have done. Maximum limit of liability, which is in other insurance product, it is called as sum insured. In this product we call as maximum limit of liability. That is nothing but the total claims which we pay for the tenure of the policy in one single policy. Multiple claims, insurance company will keep on paying the premium. Insurance company keep on paying the claims till the time the complete sum insured is exhausted. And the sum insured is structured as a multiple of your minimum premium. Just to give you an example, say, for example, 100 crores is your turnover. and we charge say 10 lakhs premium for your 100 crores, covering your 100 crore sales, and multiple of that, say 50 times of 10 lakhs becomes your sum insured. So 5 crores is the sum insured of the program. Whatever invoices you issue during that 1 year will is covered under the program, and multiple buyers fail, insurance company will keep on paying the claim till the time 5 crores is exhausted. It is linked to your premium, it is linked to your turnover, so that in case if your turnover increases, you'll end up paying additional premium, and accordingly your sum insured will increase. For instance, if your turnover from 100 crores becomes 200 crores, you from 10 lakhs you pay additional 10 lakhs, your total premium becomes 20 lakhs. 50 times of that becomes 10 crores. So for your sum insured when you started the program was 5 crores. Over a period of time, as you do more business and add new buyers probably, or do more business with your existing buyers, it will increase to 10 20 crores. That way it's an automatic chain which will help you to make optimize use of this policy. Next concept is maximum credit period. As I pointed out earlier, if a delayed payment, a timeline is defined. So for in general, this is 120 days. Depending on your cycle, depending on your credit period, it can be adjusted to say 150, 180, 210, 240, 270 days also. But at the inception of the program, you need to define that what is the general credit period you offer. We will put some markup on that because you will also need some time to talk to buyer and take the payment from them. So we will put some market, and accordingly maximum credit period will be defined. Maximum notification period, that is a 30 days more than the maximum credit period. This timeline is provided to file the overdue, to file the claim with the insurance company. Then buyer-wise credit limit to be obtained for each buyer. You need to make sure wherever you're extending credit, you have a buyer limit in place. For that, we have an online portal where you can see all the buyers which are covered and the exposure which insurance company is obliged to take. In case if you are finding the limits requested are short, you can make multiple requests during the tenure of the policy to increase the limits, and then you can take the additional limits, and subsequently you can do business with them. Then credit limit here represents the maximum exposure which you're going to have on that particular buyer. While we understand at the inception you might think of X, but if the business picks up that your requirement will increase from X to X plus Y, but you can make that request once the policy is going on. Next slide, please. There are some questions coming on. I will take up subsequently once once the presentation is completed. Now, certain exclusions which we need to understand here. General trade disputes are excluded from this policy, or I'll say it will be suspended. The claim would be suspended till the time the trade disputes are resolved. Next is your own sales to subsidiary and associate companies are not covered. However, in this case, we cover the end buyer. For example, if you have an entity based in US, you're exporting from here to US entity, and then US entity is subsequently supplying to the end customers there. In that case, we can cover Indian entity as well as your US entity as insured. So Indian entity will become insured, the US entity will become additional insured, and we can cover the local sales which your US entity do in US market. So that way we are not covering your first leg, that is sale from parent entity to subsidiary, but we can cover subsidiary sales to the end customers. Then sales made under letter of credit. So LCs are considered as secured instrument, and that is why you need not cover. However, just from an information perspective, in case if you're dealing with LCs of not MNC banks, then you have an option to approach insurance company and request to cover the LC bank also. In that case, we are basically covering the default risk of the bank, that if the bank is not able to honor the payment as per the due date, then the claim would be covered. Otherwise, in general, we don't cover letter of credit. Sales as advance payment, there is no element of credit involved, so we did not cover that. Sales to individuals and for non-commercial use are not covered. See, here we are talking about private limited companies, proprietorship, and partnership. These are the four constitutions which are covered under the program. Individuals like me and you would, if you're making sales to them, then that would not be covered. Then consequential losses. So if your invoice is having an element of say penalty clause or interest clause on late of payment, such type of coverages would not be there. We would be only basically covering the principal amount, and in case if any GST, if it is applicable in local sales, then GST will also be covered. Whatever credit limit we have set, insurance company is responsible up to that amount. If you do business anything above that, that loss would be completely need to be absorbed by the insured. Then nuclear risk and a war between five power nations. If that event happens, or we technically say it as nuclear war, in that case this cover would be suspended. And lastly, loss due to foreign currency fluctuation. So we understand that once you give a credit period, the currency exchange rate would be different at the time of shipment, and the currency rate would be different at the time of receipt of money. Or if there is a delay in payment, there will be further differences. But we are not taking care of any currency differences. We will be only talking about the principal amount. And if any exchange rate in case of a claim, we will stick to Reserve Bank of India's exchange rate as per the respective date of invoice and the respective date of due date. Now we can move on to the next slide, please. So this is the claim timeline which need to be understood in detail. As I told you earlier, maximum credit period is the timeline within which it is expected that you should get the money from the insurance from the buyer. If you are not getting the money in the next 30 days, you are filing a claim with the insurance company. In case of a protracted default, once you file a claim, there is a 150 days waiting period. So what happens in this 150 days waiting period? Insurance company has an in-house debt recovery team. So just to add here, we work with multiple reinsurers, and these reinsurers are present in your respective buyer's home country. So they have capabilities to locally approach the buyers and try to recover that money. So this 150 days is the timeline allowed to them, so that they can amicably get the money from your buyer. And in this 150 days, whatever recovered, that will reduce the debt. Subsequently, after the completion of 150 days, whatever is the situation, if no recovery or partial recovery, 90% of your outstanding amount will be paid by the insurance company in the form of a claim in next 30 days. So this was about a protracted default. In case of insolvency, there is no concept of claims waiting period. Once you file a claim, once you file an overdue, next 30 days, the claim is processed. Yes, next slide, please. Yes. Claim filing documents, what all information is required? First is the claim form, which will become a part of a policy document. Then your invoice copies we need to submit. Your statement of accounts, that is your account statement in relation to that particular buyer, needs to be shared. In case you follow a practice of balance confirmation periodically, then your latest balance confirmation with that particular buyer can be shared. Proof of delivery, that is shipping bill or e-way bill, that can be shared. Purchase order, sales contract, if your business has this practice of taking purchase order or sales contract, that can be shared with the insurance company. In case, because for some material issues, if there is any debit note or credit note shared, that can also be shared with the insurance company. During the time period when you have made any follow-ups, those follow-up communications can also be shared with the insurance company for their future reference, in case we want to go legal against them. And based on all these documents, in case if we need any additional document, we can put a request to you for sharing any additional information. Now let's move on to the next slide, please. So cost involved, this is a very important slide, because most of the times we understand that if a premium is paid, then entire coverage would be there. So in this policy, there are multiple costs which is involved. One is premium, which is basically towards the risk which you are taking. The next, we are talking about the credit limit fees. Credit limit fees is nothing but fees of underwriting the buyers, the portfolio of buyers which are getting underwritten. The reason we are charging this fees over and above premium is because this is an altogether different service which we are taking. We have tied up with all the big data management companies across the globe who procure the data available in the local market, and they submit to us in the format in which we want to underwrite. and we stick to TAT also. So for example, if it's a private limited company, we have a TAT of 2 days. In 2 days we would come disclosing the name of the insured or or the insured, and we check whether such a business is available there or not. Along with that, we also have a system or portal which you will have an access, where you which can be used seamlessly. It will be linked to your email IDs. So once you put a request there, the information will be shared with the underwriter. Underwriter's assessment will be shared with you on the email. You need not open that portal again and again. So that is why all this backend cost is charged separately over and above premium. The next is the intervention fees. Intervention fees is applicable when you file a claim to make sure that we see genuine claims. However, if you are using the online portals, this intervention fees is not applicable. And lastly, the collection fees. So collection fees here we are talking about, as you heard, that the indemnity levels are 90%. So 10% is the loss which insured is expected to absorb. And similarly, when it comes to collection fees, 90% of the collection fees is absorbed by the insurance company. 10% of such fees is chargeable to the insured. However, these charges are very nominal, because we have a big team which supports us globally. So these charges, the insured's contribution will be irrespective of the loan amount. It is some in 1,000 rupees, I'll say. Below 1 lakh rupees, below 50,000 rupees is what is the collection charges which would be chargeable to insured, irrespective of whatever amount outstanding. Yes, next slide, please. Hello. Yeah, you can move on to the next slide.
Sorry, the earlier slide, I think Sachin meant the earlier slide. Yeah, competencies.
Okay. Actually, and I am not able to. I am able to see the previous slide only. If it is changed, then this slide talks about competencies of ICICI Lombard. So we have been writing this business from last 20 years. You can say since inception of this product in Indian markets, and we have been working with very strong reinsurers here and getting their expertise in India. As of now, around 8,000 to 9,000 buyers are there in our portfolio with 13,000 crores of exposure. A very strong reinsurance support. We have a dedicated team at regional level also to support on how you can get best out of these policies. And in last 2 years, we have paid around 144 claims, which is roughly about 65 crores in last 2 years. So that is how this product has been evolved, and that is how ICICI Lombard is a front runner as far as private insurance policies, private insurance product, private insurance service providers as concerned in relation to this product. Uh, I think this was the last slide. That's it from my side. I'll just take up the questions if, yeah. So there was one more question asked during the session, that was whether we cover, or what are our claim scenario in relation to Sri Lanka, Bangladesh, Israel, Gaza, and Ukraine and Russia. So just to point out, it has been some time we are not taking any exposures on these countries. As of now, we are still open for Israel. We had a good exposure when Russia-Ukraine war happened, and we paid certain amount of claims for Russian buyers also. However, subsequently we are able to recover that. How is the sales increased? By identifying buyers. So Sushmita, here you go to new markets and you explore, you give credit to them, you add on new customers in your portfolio by giving credit, whereas the default risk is transferred to the insurance company. That is how you can add new buyers and increase your sales. What is the minimum premium amount or minimum turnover to be considered for credit insurance? We are looking at around 30 to 40 crores as a minimum premium for this program. and we
So thank you so much, Pramodji and Sachinji. I'll just hand out this forum to Naman. Naman, kindly take over.
Yeah, thank you. Thank you very much. It is indeed my pleasure to propose a formal vote of thanks for this webinar. Our sincere thanks to all the participants for being with us for this important webinar. We hope that session was insightful and knowledge enriching for all the participants. You must have taken advantage of expertise and experience of our speakers. Our special thanks to Mr. Pramod Bhuvan and Mr. Sachin Shinoy for addressing all the participants and addressing all the questions